So let's get to the housing. So this is the real estate on the ground update. This is the fourth iteration of this slide. You guys can obviously see it's a little longer left to right. All right, let's get oriented. So this is looking weekly, is where we have the hash marks going back to March 1st. So the red line that we're seeing here, this is essentially when the stay-at-home order was given, right around March 19th. All right, so what we're looking at here are new listings. The one thing that I want to tell you before we get into all this real estate update is all of this is building on the previous 3 episodes. All right, so if there is something that is not making sense, feel free to call, text, or email. I would love to discuss it with you. But if you want, the YouTube channel has all the episodes. It has all the segments broken out. So you could head over there, youtube.com/Ryan Riell. It'll be somewhere at the end of this. But ultimately, that's where you're going to be able to find this, okay? So what we know prior to the coronavirus is we had historically low inventory, low number of homes, historically speaking, in San Diego County. Coronavirus rolls around, and we can see that that very clearly dropped down. We can see that roughly 1, 2, 3, 4, 5 weeks of just kind of humming around. Not a lot of new stuff coming on, but still properties coming on. Remember, real estate, buying and selling homes, property, that is an essential service. There's some people that disagree with that, and okay, that's fine. It's the example that I gave last time was the 67-year-old couple who has 2 kids and 6 grandkids that just lost 67% of their life savings when the coronavirus came and the stock market dropped. They got stuck in a position where they have to sell their home, buy some little condo, and have money to live the rest of their lives off of. That, I would argue, is an essential, is a necessity, and it's essential. All right. So the people that you see buying and selling once the coronavirus came along, they had a very good reason to do it. All right. And so what we're starting to see, people are becoming more and more comfortable with the coronavirus and what the potential threats are, et cetera. If we were to draw a line of best fit, call it from roughly April 5 to today, we can see that it is definitely trending upwards, meaning more and more new listings. The exciting part of this is what has basically happened at the very end of April into May. We are starting to see more and more homes come on the market, which is wonderful news. We are going to get more into the housing market specifically across the country towards the end of this. But if you're wanting the detailed analysis, the last 3 episodes have all the info you could ever want. All right. So new listings, more and more of them are coming on. Here's the pending listings, right? So remember, pending is an offer is accepted. The property comes off the market into a pending status. You can see the number of transactions that were popping along pre-coronavirus. And then come the 19th, we just plummeted down to basically the bare necessities. All right. We know that it basically plopped along for about 3 weeks, and then it has started to increase very nicely as we have gone through the month of April and into the month of May. All right. So this is good news. This is very good news for people. This is another view of the same thing where now we have the pending and the new on the same graph. Okay. We want to ideally have 6 to 7 months worth of homes in terms of months worth of inventory on the market. It's a good, healthy market. In San Diego, if we have 4 months, that's considered a pretty healthy market, maybe even a buyer's market. We're down around 1.8 months worth of inventory right now in the county, right? So whenever we are going to see an increase in new listings, that is a great sign for the county. When we see the number of active and pendings going up, that's even better, right? So we can see the number of pending transactions for the beginning of March were tremendously higher than the number of available properties. That means we were buying them at a faster rate than they were coming on. That all switched right around the 19th of March, and we can see that the new listings started largely outpacing the sales, all right? We also know that right around the middle of, right around April 20, April 21, 22, somewhere in there, we crossed back over briefly to where we had a lot of buyer activity picking up. And along with that, we then started to see the listing activity picking up, right? So all of this on the far right-hand side is very, very promising, all right? Remember, we talked about the housing market for the last 3 episodes, and it is in a very, very strong position, especially considering where it was going into 2008 We are not in that position. All right. If you're wanting to dig into that, go to the YouTube channel. It's all broken down over there. But the market itself, based off of equity alone, is in a tremendously stronger position. Look at the month's worth of inventory. You look at the appreciation rates. You look at the limited number of cash out refinances. The housing market is positioned to pull the economy out of the Great Repression that we are in right now, instead of driving us further into it, which it did in 2008. All right, so this is going to be the big chart right here. This is the one that's going to kind of break this down. So let me orient you guys. The columns, we have obviously the categories. We have May 1 to 7, so the first week of May, second week of May, the total, and then the May projections. All right, so last week, that first week of May, we had 856 new listings come on, 670 pending. That was a net gain of 186. That was a very, very good week. That was a very good piece of news for everybody. The projections for the month of May were at a 14% increase in inventory. That is huge. We now look at the data that came in from the second week of May. We had fewer listings, 770 compared to 856. We had the same number of homes, which is kind of odd and surprising in and of itself, but I did double check it. 670 listings went pending. So we had a net gain of 100. So if we simply look at this last week, that's saying we're going to have an increase of 7.6%. If we extrapolate all this out, the current projections that we have for the increase in inventory in May is an 11% increase. All right. We talked last time about the numbers and kind of comparing them historically within San Diego, and we said a lot of the numbers are looking like last month we were kind of in December, maybe getting into January, which would mean this month, May, is January, maybe going into February. Right? Remember, February, March timeframe, that's where it starts to really heat up here. So we could be looking at essentially a delayed spring come June, especially into July and August. The activity, I think, is going to be tremendously higher, where normally by August in San Diego, it has dropped off dramatically. So I think we're simply going to see a shift, right? One analogy I heard about this is comparing the housing market to the restaurant industry, right? When the coronavirus came around, restaurants were shut down and everybody said, okay, well, we still have to eat. Let's make our food at the house. Those were lost transactions. That was lost income, lost revenue for the restaurants. For housing, people didn't say, we'll just skip buying a house. It's cool. They hit the pause button, right? So there is a tremendous amount of pent-up buyer demand, and we're going to get into that here in a little bit.